Welcome back. Welcome back to updated chart reading on the U.S. dollar Japanese yen spot. I gave out a video a week ago, last Sunday, and price was around here. It was on 12.1, and I gave two price predictions, one up, one down, in case it broke this 149.423, and I gave then the bullish target if it held. So it's looking like last Monday was a bottom. Okay. Now, I know it made a lower low, but it's again because what I've been reading and implementing in my 3-wave counts is that the beginning of the turn is from a expanding flat, and the expanding flat is right here. Whoops. Where'd it go? Okay, so this is expanding flat. So if and this is the right direction. So if we had price action moving from a higher price to a lower price, and that was our bottom somewhere, right here actually, then our expanding flat started the turn A, B, C. Now the turn made a lower low, so this confuses a lot of traders thinking that they can count this in a 4-5, which you probably can. I can argue all day long that I can count charts in 5 waves or 3 waves and probably still come out with the same outcome, but for me it's just easier to count 3 waves. 2 waves I don't have to deal with. So anyways, then once the ABC is on the move up, for the reversal, then I just find the retracement for B, and then we continue on up for another leg. So that seems to be the case here. So let me zoom in a little bit. So then on Monday, our leg really finished here on, would have been the end of the previous week. So it would have been on November 29th. Then it finished its leg down. So then we just had to move up in 3, down in 3, and up in 5 for a expanding flat. And looks like we got it. 1, 2, 3 for A, 1, 2, 3 for B, and then 5 for C. So this would all be one leg A. Now we're looking for B, and then a leg C up higher. Right now I'm counting this move in a complex correction, more or less a kind of a 333 WXY XXY correction, or WXY XXZ correction from here. So it might be something like this. And the XX was a little further out on the time frame, and the Z finishes there. So yeah, that would be my 333 correction for B. So I think B is complete, and we're looking for our leg C up higher. Now I believe that this double X extended out a little bit because this is including 3 degrees, right? So this is because I already got an expanded flat for 1 degree, and then I'm counting the expanded flat as 1 move. So because I've got 2 moves already calculated, I think this complex correction already accounted for 2 moves. So now I should be able to just measure the expanded flat and get some targets. So our first target is going to be 151.957, 151.597, and then 151.895, and so on. I'll write those down. I think you can see the fibs out to the right here, except the 150%. That one is 151.95. So that's going to be what we need to look into for the week, to see how it moves. Now, I want to do a couple things, show you how I'm always going to try to implement how I count these in 3 moves on each chart reading, just to give everybody an idea on how, I know it seems like it takes a long time to instruct how I count, but once you do it a few times, it gets a little easier, and you don't have to notate everything that I've been writing down. It's just comes visible, just secondhand nature. But anyways, so the question should be, how do I know this is a bottom and not here? And I have to stay consistent on how I count things. So last week I gave 2 targets, remember, 1 bullish, 1 bearish. Now remember, I gave this bear target at 147.586, but it actually made a low of 148.63. There was no target last week that was given at a 148 area. Okay, so you'll see here shortly that I don't have any fibs for that. Now, how do I know that this leg, this move, let's say I was wrong and 148.612 was a bottom? Okay, so even if I was wrong, how do I know that we're going to continue higher next week? Well, the way this moved, the way this structure moved into 151.219, it is all one move. I mean, each candlestick opened and closed, and again, this is on the 4-hour chart, okay? It opened where it closed, opened where it closed, opened where it closed, opened where it closed. Yeah, there was some wicks that were left, okay, and we could subdivide that. That's what gives us our subdivisions into this movement. But there was no significant change. All right, so the way it moved into that 151.245 price range gives me a good reason to believe that with this significant move here, now I can start to figure out where we're going. So that's why I measure the previous leg. But unfortunately, in this case, I don't measure just this leg to get our C target. I have to start where the A had begun on the expanded flat, but because it made a lower low because of the expanded flat, it's deceiving. But I'd have to start here. So unless I was wrong and the bottom was down here, but still you can see that we're still got a upside target that I am looking for. But that being said, so the first stop loss target pretty much should be somewhere in this zone, because if this is the bottom and we've started moving up, remember I said C waves usually start moving 5 waves. So let's just say even though this one opened where it closed, you might be able to say this is a 1-2. Okay, so this is where, instead of taking the Fibonacci retracement tool, you might want to take the extension tool on this one, and this gives you a little bit better target. But let's stay consistent. I'm going to go ahead and do the retracement tool because that's usually what I use mostly. So that would just be based off this first candlestick. This would give us all of our targets to the upside. That would be like a day trader target, you know, within intraday trading. So let's just recap here what I said. So basically our internals, this is an A, B, C, and then all of this is one move. A, B, and we're looking for a C up. Now, I want to start on the turn down and go over some moves to show how we have gotten to the point that we're at. So again, I'm not going to focus on this move up. Let's just focus on the turn down. And let's zoom in here. Now, actually, let's zoom in a little bit more. So this is the top here on November 14th, 2024. If you were in, if this, let's say I had a fib up here. Whoops. What happened? Okay, computer's acting up. Sorry about that. Okay. Let's just put a trend line here. Let's say I had a fib up here, like a 200% fib or something, and that was my anticipated turn. All right. Right here is our last move, consistent, where it was a turn. Okay, so you can see that we opened where we closed, but closed higher. So this gives me an indication here that this would have been a turn leg right here, back on 11/14/2024. Now, I would have probably waited till this candlestick closed to take some measurements, because it did open where it closed, but closed lower than the previous candlestick. So now I'm going to measure this whole move, see where it landed on 38.2%. So yes, it could have continued higher from here, and usually 38.2% are going to be some kind of diagonal, maybe, especially if this is the beginning of a move. So it'd been a 1, 2, and then up higher, 1, 2, 3, 4, 5, and then maybe finished out. But in this case, we opened where we closed on the next candlestick and actually broke a lower low based on what I was measuring. So this tells me now we can start to measure our A's and B's and C's on the way down for a reversal. So here's our 1, 2, 3 for an A. So we can measure this. And you really don't start to get into the trade until the B gives its position away, pretty much, you know, its place. So these wicks tell me that was a pretty good correction. So we can measure the correction and say it was at 38.2. So we can go ahead and write that down, keep it there for any kind of future forecasting. All right. So now we have an A and a B. So now we got to get our C targets. Here's a 161.8, landed right on it. I guess it went past it a little bit, but we can probably assume that on a smaller time frame there was the expanded flat inside. Okay, so that's pretty close. And now I guess we could write that down. And, you don't want to spend too much time on second guessing yourself. Just write the fibs down, and then if they don't match later on, then you can go back and figure out where you went wrong. But again, this is just to help count, to find where we need to go at the current date. Okay, so now this gives us our A. And you can see here we made a lower low. So what does that tell me? A, B, C, expanding flat on a smaller degree. This is the B connecting it to here. Okay, so this would have all been one move, even though this is subdivided in 3 moves. 1, 2, 3. B wave, smaller degree. 1, 2, 3, 4, 5. Or maybe a triangle here. Hard to tell, and then 5 waves here on maybe a 15 minute degree time frame. So again, now we have a B wave. So now we can measure for our next C wave on a bigger degree. Okay. Now we've got the 123.6% here, and it looks like it went past it. So if you're trading this live, real time, the only thing you have, and we got to recap, the only thing we have for sure is that we've got an A3 kind of a double zigzag for an A, and we have a B, and we have a C here. I think the C's in the wrong spot. Wait, did I put that there? Oh, okay, sorry about that. Not sure what that C is for. Okay, but anyways, so if you're trading this real time, let's say you're in this section here, okay, and you've already anticipated a B, but we how do you know where the B is ending? Well, I forgot to put that fib up, so let's put that up. And usually I'm always looking for a 50 to a 61.8% retracement. With these expanded flats that I've been incorporating, they're usually hidden, so I don't typically try to retrace from there, but you can, okay? And when I do that, it looks like it hit pretty much on the 50%. But let's not do that. Let's retrace it from where we're actually counting our wave. So let's say it didn't really hit anything of any significance. You see this big push down here? It looked like it hit something. Something reacted to that candlestick, and I just don't see a retracement fib from the first wave. So that means it was subdivided. So that means it's reacting to something more internal. How about that? That's what I mean by an exact fib. 123.6. So this is my expanding flat that I was telling you about, A, B, C. Now, they don't always hit exact, but most of the time they do. So, that's why I say in B waves it's hard to trade. So you're going to have to knock it down a smaller time frame, and you could have traded that B wave easily. You would have been able to see that expanding flat, and you would have been able to see the pullback, and you would have got the B. All right, because now like I said, a lot of my fibs, these are the first three that I look for: the 161, the 50, and the 123.6. Okay. So now, where were we? We got the A and a B. We need the C. So we measure A only, measure in 3 waves. We use our extension or our retracement tool only. Start at the top to the bottom. This gives us a 123. See how this would have been our final move, but it went past it. So, let's go ahead and knock it down here on a 30-minute time frame and see if we could find out why that didn't hit on a fib. Okay. All right. So it was here to here, right? Yep. And the fib missed here. It looks like. And notice this wedge. So I'm going to knock it down to a 5-minute time frame. Didn't catch it. Let's do a 10-minute. I'm afraid I'm not going to be able to show you how these expanded flats work on a smaller time frame. Yeah. I don't think I can add a 10-minute. Huh. 10-minute, 100. Yeah. Looks like it says 5 seconds. See if that works. 5-minute on 180 day. All right, and then there we are. Oh wow, look at that. Right on there. So, and this almost looks like a glitch now when you have it on the 5-minute time frame. So, I would have liked to see a little higher wick so I could say that was an expanding flat, but let's see if we can measure that somehow. How would we count that? It would have to be right there. It's not gonna work. Let me see here. Well, those are the kind of things that when you see that and you assume, or for I do, I assume they're expanded flats when the fib doesn't hit exactly, and I can't ever go back on a smaller time frame to prove that's what it was. But when you come across something like this, where it's just price action is just so small, so minute right there, and then you got this long wick that, especially on a 5-minute time frame, I almost gotta ignore it. Maybe I can implement it into the move here, but I still have to say that the fibs is correct where I have it. So let's go back to the 30-minute time frame. No, 4 hour, sorry. And continue on. Let's get rid of this. Alright. So now, let's put this back up here. So, the 123.6 was correct. Get rid of everything else. And just notate it. Oh, left something out there, didn't I? It was where was it? Give me 1 second. It was right there. Okay. All right. Now, that's what that C was for. I knew that was there for some reason. Okay, so that's our C. So on a bigger degree, this would have been like yellow for me. I think if you can find your own way to label these things, these waves, to make sense, then, better for you. This platform just doesn't make it easy to label Elliott wave. So anyways, here's our 3 moves down, A, B, C here. And then our expanding flat, or whatever you want to call that, for our next A wave. It's not supposed to be A. And then we need a B. Okay, so, sorry. Yeah. So B waves are kind of complicated to explain in Elliott wave, but it's any 3 correction move. Okay, so I usually call it just a connecting wave. All right. So here's our 3 moves down initially, and there's our 3 moves up for a bigger degree B. Okay, now you can start to see how the chart is starting to set a trend now. Let's just find out where this pullback was. And remember, we're going to measure it from here, not to here. But if we did measure it from here, it still doesn't give us anything. Interesting. It didn't really give us a retracement fib. Well, I'm I'm usually a little too much on perfection when it comes to these fibs, but a lot of people give zones. They say as long as once it goes past a certain fib and it doesn't hit the next fib, then the zone is still the previous fib. That makes sense? So these three candlesticks technically are still in the 61.8% zone. Okay? So for argument's sake, like I said, you don't want to spend a lot of time on stuff like that gets you caught up. You want to finish the chart and then come back to it, notate it, and then maybe later on it'll come to light. So anyways, let's keep moving. Now that we have an A and we have a B, of course, here's a question. If you're trading real time, how do you know this B wave is done? You don't. Not if it was here. Not if we were on Wednesday at 4 o'clock. We don't know if we're going to go higher, because even the way it moved, this correction doesn't even look significant enough to finish this move. And we just tried to measure a retracement and it didn't give us anything. So this move is a little tricky. So and it almost looks like a leading diagonal. So it looked like it wanted to do a 5-wave move, 1, 2, 3, 4, and a 5 up. So the best thing you could do is just measure the internals, try to find some targets, and go from there. Notice that the final moves never reached our 200% fib. It's a very strange move right here, but I don't want to spend a lot of time to dissect that. I know we got other things to do. So the best thing we can do right now is say that, okay, retrace this. It went past the 50 and the 61.8%, so we're going to go ahead and say that we're expecting a move in the opposite direction, especially now we saw a zigzag here, and maybe this whole thing wants to be a zigzag. Okay, so now we want to retrace this move, see if there's any small bounces on a lower time frame. We go to the 50%, no bounce, 61%, no bounce, 76.4. There's your bounce. Most of the 76.4s indicate there's a triangle in the making, or some kind of channeling. Got our channel here. Now we're moving lower. So this would tell me this is the connecting wave from here. So now we might be able to trade. So this gives me a stop loss zone and a target for the next waves. So right away I always look for the 123.6. Okay, now let's say we got into this trade right there at 151.001. Hits our target at 123.6. It looks like it made it there in one move, right? But it's subdivided into whatever, 5 waves or 3 waves. So you'd have to break it down in the time frame to figure that out. So if it broke down in 5 waves and you can make sense of it, you probably know that you're gonna have a correction wave to correct whatever structure that was, because the time it took to get to point A to point B. So 123.6, I probably would have just taken a little bit of profit, because it looks on a 4-hour chart, it doesn't look like it made any moves. Like it just, like I said, just made one move, right? With no pullback. Here's the pullback. So once it hits the 123, you just take a little bit of profit, buy back or short it again here, or at least, short it anywhere below this point here, because you haven't really had a pullback yet. So now, where do you add to your position? Well, put your retracement tool there from your price target to the start, and it looks like it hit the 76.4 again. So I didn't notate it earlier on the 76.4, but it would have been worth notating on here, right? $76.4. So that's why you write them down. Okay. All right. So now it's kind of an instructional week for me doing these charts. I did one on Bitcoin where I kind of ran through all of the moves, but I'm not going to do that all the time. Just a few random videos. It just takes too long. It doesn't take that long. Like I said, once you get used to doing it, it doesn't take this long. But when you try to explain it, it does. So anyways, where were we? Oh, here's our zone, right? So we're on the move down. We're trying to find this yellow sea leg. So let's go ahead and describe it. Where are we going to put this bad boy? All right. So the question was, when we got up here, was this leg complete? Okay. So as it's moving down, you can start to see open, close, open, close, open, close, maybe some kind of diagonal, and then an impulse down. This usually tells me that it was 3 waves, 1, 2, 3. So I would have definitely seen that as a completed move, and then I would have compared it to the retracement, the actual retracement of this leg, and that's where it hit the 76.4 again. So that's 3 times we've seen this number. Now, so here's our A. We found it to be complete, right? Because we could see 3 waves. So we notate a degree, and we knew that there was going to be a channel or a triangle, because the 76 or 80, 90%, these gray dotted areas indicate that usually some kind of channeling or triangle pattern will appear, and it happened right here. So we can go ahead and notate that, do it as such, and then we did hit a 50% here. That would have been tricky. If you're in a hurry, you don't count these subdivisions. This would have definitely stopped you out here. You would have probably went short, probably not have taken profit because it didn't give you any targets. There's no target for that, and then you would have got stopped out because we moved our stop loss up. Okay, so this would have been, these channels are a little tricky. That's why you got to break, once you start to see the channel, break it down on the lower time frame. Okay, now we got the 50% again retracement from this leg. So now we can find this smaller degree A. Looking for the 123%. Here it is. Let's label it. All right. Now, this is what I was saying earlier. The move didn't look complete. So I would have just taken profit here a little bit. I wouldn't have closed position. I would have added to it. This is where we hit the 76.4% again. So that would have been, I think I would have caught on to that 76.4%. So I would add a position here, I probably would have got in premature at 50, 61% because that's what I like. That's what I like to see. All right. So now that we've established that this move wasn't complete on a lower degree, we know that this has got to be down here somewhere. So now we measure just this leg, look for the 123. Ooh, it went right past it, hit the 150. That's our target. Now, like I said, judging by just the 4-hour time frame, you really don't know that's where it's going to hit. So you have to look how it's moving down, right? Here's one move, here's a consolidation, and then a 1, 2, 3 down, right? So boom, 161.8, and then you find some other subdivisions, and usually when they overlap, that gives you your conviction. All right, so now we have a final leg, but this is why I'm doing this, because even though we've found our C leg, it continued down further. Okay, so this right here is what's called an extension. So if I measure, and again, you wouldn't know until you subdivide this, and then, because from here, if you want to play every bounce and you go long here, this is your stop loss, okay, right where you entered, right at the fib. Now you would want to move your stop loss up as it goes, okay. So you're just gonna have to figure that one out on your own right now. But anyways, to figure out that this was an extension, you probably wouldn't have known until it broke right here on the second day, or what is this 4-hour chart, on the second candlestick. Okay, so now is what we have to do is go back to the initial move, which was right here, and this would have been our next target, right? So once it breaks here, once it breaks the 161.8, 200% just got it's a go-to. Don't, if you're going short, go short, but don't get out till it hits a 200, and move your stop loss accordingly. But if you're going long, don't add to your position until it hits the 200. Now, in this instance, it would have been a short-lived trade, and you would have probably lost. But again, this would have been your stop loss right at the entry, and if you want to scalp a little bit, maybe you would have made something. But again, my point is it continued further. It actually went to the 261.8%, and you can see the consolidation around it. So this tells me that, again, it was an expanding flat that set the turn off, okay, or the turnaround. Expanding flat. It's been consistent. And here on a smaller degree, you'll see how it increases a couple of degrees. But it was this candlestick right here, okay, that was the end of the move. So we take this C, put it right there, and hopefully your question is, why is this lower than this one and we don't put the C here? Well, this is why. That's the answer, expanding flat. So typically the point of origins that they go past, I look for 123 on both sides. 123.6. There you go. Let's see here. This one's a little off on the B. Hold on a second. Let's see. So, and that happens, like I said, I'd have to break it down on the smaller time frame to figure out why that didn't hit on the 200 exactly. But this one gave me enough conviction to say that the turn is sufficient enough. Okay, so now we're almost there. Let's see what we got now. We've got the A, B, C right here, so now we can move this C over. All right. Now, all this mess here. See if we can make some sense out of it. Here's your 161 for an A, B, and a C. Triangles. Let's see. Give me 1 second here. Okay. All right, so now let me just recap. I had to take a break for a second. So yeah, I've got this C wave here that I don't really like. It needed to be here. So yeah, this could have been broken, counted a little differently. This would have been 1, 2. Yeah, because it was a extension, I actually have to use the extension tool on this one. So, oops. A little bit more complicated to catch the ends of the extension waves. But to do that, this is where you really have to pay attention to the overlapping fibs. So remember, this was our initial move for the minor leg A. So we just need to go back and get our targets up for that. So we did have an overlapping here on this one. But it overlaps here also. So it almost looks like let me back up here for a second. Again, when you're doing this on your own, don't spend too much time like this. I'm just trying to not confuse everybody. But this could have been a 1, 2, 3, 4, 5 down for a C, which now that I'm looking at it, makes way more sense, right? The C waves always finish in 5. So unless it's in a triangle. So with a couple extensions inside, then that would have gave us because you always want to look for 161 for a third wave, and it hit right on it. So 1, 2, 3. I guess that would have been the one to tell you, okay, where the third wave was at, and then this one to calculate where the whole leg move finishes, which was right here, actually. Okay, so Now, let's remove those. Oops. So now we have the entire move. 1, 2, 3. Whew, that was a rough one. So this A, I just need to take this out. Even though, you know, I count everything in 3 moves, you still have to calculate the C moves in 5 waves. This was just a little bit bigger degree, so it kind of threw me off. And they need to be in green. So I'm not going to spend a lot of time labeling that. Just know that this is a 1, 2, 3, 4, and then the 5 is down here. I'll put the 5 right there. Okay, so now we need to figure out this B wave up. Okay, so let's get our targets up. This is A, B, C, A, B, C. This is an A, B complex correction, looking for a C up. Okay, so I think when I started this video, I explained this was expanding flat. This is your B leg down, and this is your impulse for a C, which indicates all one move for A. This was like a triple 3 for your B wave, and now we're looking for a C wave up. So our first price targets here at the 23.6, 38.2. Now, if you remember, we had 76.4 hit 3 times up in here in this area. But I don't know. We shall see. I think this move here would have been a little bit more impulsive, I think. But where it's at right now is right at the 23.6. So, of course, that was just the first leg. So, I mean, now it's possible that could be done, and we're heading down. So, I don't think so. Like I said, I've already counted a couple of degrees, maybe 3 degrees on the way down here. So I know there's 1 degree here, 2 degrees. This will, I think it's just 2 degrees. So I think I need this to go up 1 more leg for a 3rd degree. So that's why I'm anticipating these targets up here. Okay, so I'm gonna go ahead and take this line out because it's just kind of confusing right now, and go ahead and let's zoom in, because now we're looking for a minor B wave up. And since we have our A already in a smaller degree, and we think we have our B already, and these WX, this 333 should have been in a smaller degree. Should have been in, I think I have it blue or something. So I'll change. Well, I'll change a couple of them now. I might have to change the color because dark blue you can't see on here. But okay, so since we have the A in a minute degree, B in a minute degree, this should be enough information to give us our B in the minor degree. So we just have to measure the A, which started right there. So can I do this? I don't want to get rid of all these fibs because it has targets. Let's do this. Yeah, we're gonna get rid of let's do this. Let's get rid of all these except the 76.4. That way I can remember that we have hit those retracements in the past. And then on this one, all we need are the targets past the 100%. Because we pretty confident to say it's going to go past it. I mean, it may not. We'll leave it up there. Okay, so these are our targets. Okay, so that is it. I appreciate everybody staying till the end. I know it was long drawn out. I'm not gonna go into detail on every video like this. It's just something special I'll do every once in a while, but it'll be lined out for paid subscribers in the future. I have a website up that right now I'm just taking donations, because this does take time to put together, to explain. But I hope it helps, and until next time, good luck.